Good morning from the NASDAQ stock market in New York. I'm Stephen Brown with Friday's update. The big news today, you've probably already heard, but late yesterday, the Federal Reserve came out and announced that they're raising the discount rate by a quarter point from 0.5% to 0.75%. This is the rate that the Federal Reserve charged to member banks for short-term overnight liquidity needs. It's not the rate that would affect most consumers, but the big news in this, it's the first step that the Federal Reserve is taking to go back to normal operating conditions. The first step in removing the extraordinary liquidity measures that were in place over the last couple of years. That is out there. Now the Fed, there have been a couple of the Fed governors have been out this morning and since the announcement late yesterday, and they've essentially said that this is not a change in Fed policy, but it is more of an adjustment. So don't read too much into that. That's helped things a little bit this morning. This move can be interpreted in a couple of ways. One, the Fed is confident that the financial sector and the broader economy, for that measure, have recovered enough that they can begin to take this type of action, which is good. But of course, the problem with this is that now going forward, this is step one. All the traders are asking, when is step two? And that's something that everybody will be looking at going forward. We do have a little bit of insight into what investors are thinking, looking at the Fed Fund futures market this morning, and that's a market that tries to anticipate when the Federal Reserve will actually hike the overall broader interest rates. Right now, the betting is that the rates will not go up at the next Fed meeting, but probably at the one of the two subsequent meetings. So right now, Fed Fund futures are betting that rates will probably go up before the year for June, somewhere in that range. The dollar is trading slightly higher against other currencies this morning, as one would expect. Only about 0.2%, not that heavy, definitely lower than what it was. Of course, for those of you who have been watching the markets over the last couple of years, anytime the US dollar trades higher, that's typically a negative for equities and commodity prices, and today that is the case. Asian markets are down quite significantly. European markets are down, but not by much. But again, it's pretty much down across the board. Here in the US, early market futures are also in the red. Not by much, though. The Dow's down about 37, and both the S&P and the NASDAQ futures are down about 7 points each, so not a big move there. Only other things to bear in mind, we only have about 21 companies releasing earnings today, so earnings will not be as big of a factor as it has been earlier in the week. The Consumer Price Index is the only economic data coming out today, right on target, and that's good following yesterday's much higher than expected Producer Price Index data. Lastly, bear in mind this is an option expiration day. We'll see some heavy volume at the open and at the close, but this is not the quarterly. This is just a monthly expiration, so it should not be that big of a deal for most traders. That's it from the NASDAQ stock market in New York. I'm Stephen Brown.